Hey guys, Justin with Deep Dive Stocks here with another data dive. Today we're going to be looking at IBM. IBM is interesting because it has an earnings call coming up, and the reports can get pretty interesting with earnings call because we can kind of look at the data to gauge how the market is positioning themselves for post earnings call. And we're going to see that IBM is pretty interesting because it seems like the market's expectations are split. Seems like there's a good group of people who think that the price will rise after the earnings, and then there seems to be a good group of people who think that the price of IBM is going to drop after earnings. So let's look at the data, and we'll let you decide on which one you think is going to happen. So this is the data from Friday, for IBM on Friday. The VoEx for IBM is pretty interesting. It's pretty erratic, which is not ideal, and it indicates that IBM has these large undercurrents that are kind of switching around a lot. Kind of makes gauging this overall stability of the stock difficult if the stability of VoEx itself is unstable, right? Quick recap, VoEx should be hanging out inside of here, right? This is the stability zone. Whenever VoEx moves beyond it, so either above into the inhibition zone or below into the propagation zone, that just means that the stock is unstable, and the two different types, whether it's in the inhibition zone or in the propagation zone, they tend to have different statistically relevant outcomes that happen. And we see in the most recent, it seems like most price appreciations are met with this instability from VoEx, right? So we have the price rises here in November of 2021, and VoEx rises and drops, and so does the price. And it looks like the same thing has happened at the start of the year in 2022. The price rose, VoEx spiked up, and the price fell. But now that, and currently, I guess before we move on, VoEx is still in the VoEx-trend is still in the propagation zone, right? VoEx daily might be moving back into stability, but overall, the take-home point from VoEx is that IBM is unstable. Not the ideal situation when you're going into earnings to have an unstable stock, and that's part of the reason why IBM is an interesting specimen this turnaround. So take-home point from VoEx, IBM is unstable. And the snap graphs, they kind of offered a little bit of bullish sentiment, right? So on the 1 day, so that would be Monday, the 4, 5, 6, 7th, positive returns. For the 1 week or the 5 trading days, we have positive returns. For 10 days or 2 trading weeks, positive returns, and kind of neutral overall for the 1 month. And the snap graphs take the VoEx behavior and map it to future price action on the same time interval. And the line is the trend, the blue highlighting is the 95% confidence interval, and the crosshairs indicate the current output or prediction from the snap algorithm. So we have mostly positive, which isn't bad, and neutral on the more long-term or the 1 month outlook. The expected price range, or how much IBM's price moves with respect to how much the market would like it to move, officially it's the 68% probability distribution curve of the price. We see that IBM is pretty well behaved. Occasionally it dips outside of the market's expectations, but nothing too crazy. Recently, volatility, so this is implied volatility, it looks like towards the end of January, just dropped off the face of the earth. So a lot of liquidity entered into IBM, and currently volatility is rising. And it doesn't seem, one of the things I look for is if I notice a trend in volatility, like here, volatility is overall rising. I like to see what is the price doing as volatility is rising, and the price is also rising. So that tells us that as the price rises, there's diminishing liquidity. And this is also something that we see in VoEx itself. VoEx does start measuring liquidity and the absence of liquidity when it becomes too much. And we notice that as the price was rising, that's when VoEx started spiking, which is around the same time that the implied volatility started rising as well. So VoEx was picking up on the diminishing liquidity, which typically means that, well, if liquidity is diminishing on the upside, there's less buyers, or it's more difficult to buy. Typically, eventually the price will fall. Shorting recently has been on a steady increase. It looks like since October, November. So since November, it's just a steady increase in shorting. Nothing like crazy though, no huge jumps in shorting, especially with earnings coming up. The options layout is interesting in that it has honestly a relatively nice options layout. We like to see a nice normal distribution curve for the calls. So real quick, the options on the left, they are how the options are today. And so we have the calls on the left, the puts on the right. And then over here, we have the change in the options where the bars represent the change in the open interest count from the day prior. And the lines represent the average change at that strike over the past month. So we see over the past month, some calls have been being opened. It looks like some in the money puts have been closed, as well as out of the money puts have been opened. On Friday, a good amount of calls were closed, a good amount of puts were closed. This isn't too surprising given that Friday is typically a common weekly expiry. But we see one of the things that's interesting is this large call wall at 140. The call walls are interesting, especially in IBM's case, because it depends if they're sold calls. So did retail investors sell those calls, or did retail investors buy those calls? Depending on which one of those possibilities it is, will determine how that call wall starts to affect the price as the price either moves away or towards that strike price. So right now at 140, we have approximately 47,777 calls. Not too shabby. And it looks like they've increased. So yeah, from Thursday, these calls increased, but the overall trend, interestingly, has been for calls at that strike to be decreasing. Because it's a Friday options change, one of the things I like to do is look at the previous options change, just because of the weekly expiries. So if we go to earlier in the week, we notice something interesting where this is from the 3rd, so on Thursday, we notice that a large portion of calls at 140 were opened, and in fact a 400% increase at that 140 strike. One of the things that I always like to do when I notice these large options changes is to look at the delta to determine, and that can help us determine if those calls or puts were dealer short or dealer long, right? So the price didn't change that much, so that means that any change in delta is probably due to the 400% increase in the calls, and we see that delta increased drastically. So from Wednesday it was negative 68,000 to today it's negative 1,000. So this tells us that these calls that entered, the 400% calls, they brought a lot of long delta, positive delta. Well, what type of calls bring positive delta to the options dealer? Well, that's retail short calls. So that means probably the majority of those 400% calls at 140 were retail investors sold to the market. That indicates that there's probably a large portion of people that don't think the price is going to rise beyond 140. That's why they sold their calls there. But what's even more interesting is if we go back even further, I was just looking at IBM, looking at the data. If we go back to the 28th of February, near 140, another large chunk of calls were opened up. Actually more than 400%, right? Almost probably 500. This time though, it dropped the delta. But so it looks like, well, so if it drops the delta, that means there's more short delta. Well, what type of call gives the options dealer short delta? Well, that would be a short call. So that means the majority or the good portion of these calls were purchased by the retail investor. So it seems like on the 28th, a group of investors thought that maybe going long on IBM was a good idea. But then by the 3rd, it almost looks like a change of heart occurred, or like more north a little bit, a few dollars more of the strike, a whole bunch of calls were sold. So we have this competing ideology on what IBM is going to do, because we have a significant portion of calls at 140 that are dealer short, and a healthy portion of calls at about 135 that are dealer long. So we move back to today. The puts are relatively uninteresting. We do have a nice right tail, so the normal distribution on the calls is good. A decent amount of puts on the out of the money, fine. But again, we have that competing, those two groups right now, where there's a large portion of these 140 calls are retail short, and then a healthy portion of these, what seems to be about 135 calls, are retail long. Just because the 140 calls started out at a higher amount, and they increased by about the same 400 some percent, there is definitely obviously more retail short calls at 140 than there are 135. The overall, though, if we look at the delta for the past month, we see that it was positive, but we definitely dipped a little bit, right? So we lost a whole bunch of long delta, and it seems like we're regaining that. That's good. We want long delta on the stock. Volume is fine, doesn't seem to be too outrageous. The short interest is decently high, right? Days to cover, 5 trading days to cover the shorting. So we have an open short interest of 24 million. And then if we look at the average volume of about 5.9 million over the past month, that gives us about a 5-day to cover. That's pretty significant. It could play a role in the earnings. Another thing to keep in mind is the expected price range, which takes the, again, these are just the numerics for the expected price range up here. And so we see in the next week, T plus 5, we have a plus or minus 3.21% move that would be reasonable within the market. So any daily move that is about 1.36, so if it's plus over 1.36 or under negative 1.36, that would be like a bigger than normal move, which may happen during earnings, so that's something to keep an eye out for as well. Hedging matrix is healthy. The only thing that also caught my eye was the out of the money puts that are long is a pretty significant amount. 85% is a little bit more than you would want. These tend to get a little destabilizing if volatility starts to rise again, and which it is. So a little bit of a mixed bag on IBM. On one hand, we have VoEx-trend is telling us that it's unstable. It's in the propagation zone. We have a significant number of retail short calls that were opened in the past few days. And we have a large amount of dealer long out of the money puts, which can be pretty destabilizing, especially when volatility rises, which it is. On the other hand, you have a healthy amount of about, what did we say they were? 135. A healthy amount of those calls seem to be dealer long. But again, it looks like there's more dealer short calls at 140. So that's IBM approaching earnings. I'll let you decide how you want to interpret the data as you want, but that's the data. I will say, if the conversation on data is interesting to you, I would definitely recommend checking out the video I have on data or delta, as well as I have tons of material on the website, deepdivestocks.com, that can just kind of give a good foundation, a good introduction into some of this material. And yeah, that's, as always, thank you for joining me. This has been a fun data dive, an interesting stock, and happy trading, guys. Have a good one. Bye.